Okay, welcome back. We have the Yes Bank numbers which are flashing on your screen, and it seems as though they have beaten the profit expectations by a marginal amount. So 610.4 crores is where it's come in at in terms of the profit. So that would equal to a growth of around at least 23% for Yes Bank. So that's a growth of at least around 26% in terms of the bottom line. So that has been a beat on the bottom line. We'll wait by for more details such as the asset quality ratios, etc. Yeah, go ahead, Nigel.
The net interest income, in fact, has come in at 1,108 crores, Ekta. So that's one of the numbers that's popped up on the screen. Their provisions have come in at around 104 crores. So that's lower by close to around 13% on a sequential basis. The NIIs have come in higher by close to 29% on a year-on-year basis.
Yeah,
I think the NIMs as well are around 3.3%. So that as well appears fairly decent as we speak.
Okay,
Ekta.
I have the gross NPA ratio with me. So that's 0.61% for the quarter, and this compares to 0.46%. So that's the reason why you're seeing the stock possibly come down a little bit, because the gross NPA has worsened. But if you look at it, it's not even close to 1% for Yes Bank in terms of gross NPAs. They're still sub 1% in terms of total gross NPAs. So 0.61 compares to 0.46% Q on Q. Net NPA at 0.20 versus 0.13% Q on Q. And the gross NPA absolute amount, I think, has come in at around 491.4 crores. This compares to 368.3 crores Q on Q. So that has been a worsening in terms of the gross NPL, and the net NPA also on an absolute basis has come in at around 158 crores versus 106.7 crores. So just to put things into perspective, the NII is okay, the profit is okay. We've got the net interest margins which have been maintained at 3.3% as well, like Nigel mentioned. We have the provisions which have come in a lower year-on-year and flattish on a Q-on-Q basis. So what has possibly just pressured the stock has been maybe the asset quality which has come in, but if you see it, the stock I think has recovered from the day's low at this point in time. Commentary will be key. We have Vaibhav Agrawal of Angel Broking joining in to talk about the numbers. Vaibhav, tell us about what you thought of Yes Bank.
Well, actually the bottom line has come in about 4 or 5% higher than what we were expecting. But, the net interest income is in line, and the beat has actually come to lower provisioning. We had in fact built in 175 crores of provision to be on the, safer side. But the net NPA has gone up by 50 crores in absolute terms. So, possibly, if they would have sort of provided for those net NPAs, and 30-40 crore lower profit, maybe more or less in line. It's just that the net NPA has gone up and the provision is lower than what we were expecting. Okay. So I would say a little less provision than what they could have probably done for the net NPA.
What about hearing in terms of commentary based on what you've seen prima facie from the P&L of the gross NPLs as well as the net NPLs? Is there something specific that you'd like to hear from the management?
Well, yeah, we would like to know what is their, outlook going forward as well on asset quality. There have been concerns, regarding their exposures to metals and EPC sectors as well, where the management themselves was a little cautious. So, they've given a credit cost guidance of 80 basis points for the year, and for the first half, clearly it's much lower than what they've been guiding. So, we would wait for what they actually expect for the second half of the year as well.
Okay, well, we've got more details with regards to the total advances. So that's up 29%. That's okay. More details on asset quality. There has been no sale to asset reconstruction companies during the previous 4 quarters. Also, the bank has not refinanced any loan through the 525 route. So these are important statements coming in from the bank, that no sales to asset reconstruction companies during the previous 4 quarters, and I'm assuming that includes this quarter, and the bank has not refinanced any loan through the 525 route. Otherwise, the provision coverage ratio at 67.7%, I think it's come down from the 71% in the previous quarter. So total restructured advances stand at 569.3 crores, and I'll just pull up the figure in terms of what it was the last quarter, but 567 in the previous quarter. 569 crores is marginally worse than what they had done, or it's absolutely flat actually in terms of what they had done in the previous quarter. Your take on these ratios, and like you can see, stock has recovered quite dramatically on an intraday basis. Vaibhav, your statements on the asset quality internals, what we have right now?
Well, I think, the additional disclosures that they've given would give some comfort, regarding the fact that clearly whatever pain is there is what we can see in the numbers. So, in absolute terms, of course, a 50 crore increase, although it looks like a 50% increase in net NPAs, but, the numbers in absolute terms are so small for Yes Bank. So, in that sense, clearly asset quality is still, not really as concerning as the rest of the system. So, in that sense, Yes Bank still has delivered a pretty decent set of numbers and a pretty high growth on the operating front.
All right, then let's get in Gaurang Shah as well, who joins us. Gaurang, we have the headline numbers or the NIs, the profitability appears more or less in line, though the asset quality is a tad bit of a worsening that we have seen. The stock, though, has recovered from the low point of the day. What's your first take?
Well, Nigel, let me give a disclosure. We are maintaining positive coverage on Yes Bank for a long time, and whatever earning numbers that the bank delivered last quarters, we have set aside a target of somewhere close to about 850 or 860. My only worry, Nigel, is in terms of asset quality, because this time around, this is another quarter wherein we've seen some of the private sector banks reporting a little bit marginally, of course, higher number.
But Gaurang, just to add, in the press release, they've said that there has been no sale to asset reconstruction companies during the previous 4 quarters, and also the bank has not refinanced any loan through 525. And my sense is that I think those were a couple of statements that I think the street might be looking out for quite closely.
Yeah, and that's one particular face saver, Ekta. Yeah. And I was just coming to that because we saw what happened to Axis Bank after they did a sale to an ARC. So my sense is that yes, these are, but I hope this is not the new normal, Ekta. I mean, they should possibly pay attention and take care that these numbers, though marginally upwards, do not really escalate to a larger extent. Because we know, what was the case with the banks. In 1 quarter, we saw that with, of course, a public sector bank, Bank of Baroda. 1 quarter was enough to deteriorate the asset quality. So I hope that due diligence and due importance is given and recovery does come at the top of the priority list. We are positive as of now when we believe that interest rates coming down should throw up positivities in terms of recovering some of the bad assets. So that should create a positivity. Overall, as a brokerage house, we are extremely positive on private sector banks, including Axis Bank that I spoke about.
Okay, I just want to point out that in the entire press release, and I don't think this has happened before, or my memory doesn't serve me, but they've given a whole sensitive sector disclosure breakup in terms of their sector as well as the rating. So electricity stands at 9.8% in terms of their total loan exposure. To non-renewable, they have 2.6%, of which 2.4% is operational. Renewable exposures, which is green financing, 3.4%, of which 1.3% is operational. Transmission and distribution, which is 1.8%. AAA and AA rated investments are 1.9% of that. Exposure to SEBs is nil. Iron and steel is what the entire analyst community is worried about in terms of the entire banking space is 3.8%. A or above rated is 3.2%. EPC is 6.3%. A or above rated is 4.3%. And CRE is 6.4%, which is basically residential 5 and average security cover of 3.4 times. Vaibhav, your sense in terms of the sensitive sector disclosures by Yes Bank, and now the stock is in the green.
Well, clearly there were some concerns raised regarding specific power exposures, but our discussion with the management discussed these similar numbers that on the power side, actually their risks are lower, exposure to under construction projects is lesser, and to, it's mainly to renewable and high rated bonds, etc. But the management is also cautious on their metal as well as their EPC exposure. So there is likely to be some slippage maybe in the next, 2-3 quarters from metals and EPC. But, that is already baked into the numbers. We are factoring in much higher provision run rate than what they've done this quarter as well. We are factoring in more than, 175 to 100 crores in the coming quarters as well, which should take care of those sensitive exposures as well in our view. Even with that, they should report a pretty good earnings growth. So in that sense, the outlook remains to an extent positive on the stock.
The provision coverage ratio has come down on a quarter-on-quarter basis. So 71% was what it was in Q1 of FY16, and that's come down to 67.7%. Vaibhav, I know it's not much, and 67.7 is still a pretty high provision coverage ratio, but the fact that it's come down QOQ?
Yeah, actually, like I was mentioning, we would have probably preferred if they would have maintained it above 70%. In fact, they had indicated that 70 is the level they would, over a period of time, prefer to maintain. And, possibly the net NPA number was lower, and even if, with that the profit had come in at 20-30 crores lower, it would not have been such a big deal. So we would, probably hope that provision coverage does come up again to that 70% level in coming quarters.
Okay.
Based on the sensitive sector disclosures, how would you rate it? Because at least for iron and steel, EPC, CRE, most of, their exposure seems to be covered by ratings of A and above. It's only in electricity where out of the total exposure of 9.8%, at least according to the press release, only 1.9% of that is in AAA or AA rated investments. How would, any thoughts, Vaibhav, on the disclosures that they've made with regard to Yes Bank's exposure to sensitive sectors?
Well, regarding the EPC and metal, even if the exposures for A and above are, on the higher side, that by itself would not give us enough comfort, because, those sectors are in trouble, and it's likely that, those exposures could get downgraded over the coming quarters as well. So we would remain watchful. There could be some slippages from, those two sectors going forward as well. So that concern would remain. But like I said, that is baked into the provision credit cost estimates that we've built in for the year as a whole.
Okay, well, we have the non-interest income also, which we didn't detail, but just for our viewers, it's up 22% on a year-on-year basis to 618 crores. And within that, we've seen Forex, debt capital markets and securities rise handsomely by 75% year-on-year to around 152 odd crores. But Vaibhav, I just wanted to, end this conversation with your thoughts on the valuations of Yes Bank now, because we've clearly seen the street reward, companies that have outperformed, say, the likes of an IndusInd, or even, punish companies such as the likes of Axis Bank in terms of the asset quality. In terms of valuations for Yes Bank, where do you see it go?
Well, actually now it's available at less than, 2-time price to book at around 1.9, which in our view, more than enough discounts the concerns regarding corporate exposures. Obviously all these corporate banks are trading at a discount to the more retail-oriented banks like IndusInd and HDFC Bank, but, in our view, this discount is quite wide by now, and, for us, 1.9 is a good level to enter into a stock with 20% plus earnings growth and 19-20% ROE, with a reasonable, ability to manage the stress whichever is there in their books as well. So, for us, it's a good valuation to actually enter into these stocks.
Okay. All right, Vaibhav, we leave it on that note. Thanks very much for joining in and talking to us. As well as Gaurang, thank you very much for joining in and taking us through the Yes Bank numbers. It's been quite a interesting reaction that we've seen, all the way from being lower, right. It's now up in the green.
I think it made a low of around 710. You told us the numbers were not so bad. In fact, the stock has recovered.